Today, Bitcoin dips after stronger than expected jobs data in December. Plus, David Foley of the Bitcoin Opportunity Fund breaks down Bitcoin's recent swings as investors shift their focus from politics to the economy. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital currencies are closing out the first full week of 2025 in the red, thanks in part to signs of lingering inflation, stronger than expected jobs data, and signals that the Fed might hold off on further cutting interest rates. As of noon Eastern, Bitcoin slipped about 0.6% and traded in the $93,000 range. Ether fell more than 1.5% to 32.47, while XRP fell more than 1.7%. If we look across the week, there's a lot of red on the board for both crypto and stocks. Bitcoin fell more than 4.5% in the past 7 days, while Ether dropped nearly 10%, and XRP's down more than 7%. Okay, one quick story we want you to know about. Crypto donations continue to pour into President-elect Trump's inauguration, this time from stablecoin issuer Circle. CEO Jeremy Allaire shared yesterday that the company donated 1 million USDC to Trump's inaugural committee. He also said the fact that the committee accepted the payment via stablecoin shows the potential and power of digital dollars. The industry has high hopes it'll see crypto-focused legislation under the next administration. Stablecoins are often cited as a top priority. Others from the industry who have reportedly contributed to Trump's inauguration include Coinbase, Ripple, and Kraken, all companies who have faced scrutiny under the Biden administration. All right, as I mentioned earlier, inflation and economic concerns are back in focus for the crypto market. So for our main story, I spoke to David Foley, co-founder and managing partner at the Bitcoin Opportunity Fund, for his take on Bitcoin's recent swings. All right, well, David, thank you so much for joining us on Crypto World. Let's start with how Bitcoin's trading. We're all aware of the major rally that we got after the election. It seems like a lot of people believed that optimism around another Trump term was going to drive crypto prices higher in the long term. And I do think that, that would be supportive for crypto. But now we're getting more data about the economy, some red flags that inflation might be sticking around. And it kind of seems like investors are starting to worry again. We knew it wasn't going to be like a straight line up to 200K or anything, but it does look more like Bitcoin's price has wobbled a bit every time new data comes out, including today with the hotter than expected jobs report, of course. So how do you see it? Is election euphoria over, and is macro driving things again?
Yeah, and first, thanks for having me, Tanea. I think that, there's no doubt over the last several months, Bitcoin has rallied a lot on thoughts of the Trump victory, the potential for a strategic stockpile or a strategic Bitcoin reserve, the fact that you'll have better regulatory and legal clarity. And I think that all those things are good. I think what I'm observing is the stock market in general is getting heavy. Bitcoin has historically had a high correlation with the NASDAQ, the triple Qs as an example. And I think that, it's good to see today, though, where you got the NASDAQ, the triple Qs down 2% and Bitcoin's actually up. It's kind of participating a little more like a risk off asset, a flight to safety type scenario like gold is doing. Now, obviously, I think Bitcoin's going to eventually go through that transition. It in the medium term tends to participate more like gold, though, as that flight to safety and also just has the general growth dynamics of the space that I think are going to propel it. So I think that, in general, one last point is, markets breathe. Bitcoin rallied very hard last year, as you recall, in the first quarter, and then it kind of went into what I'd call a bull flag. Bitcoin kind of paused and was trending down for about 6 months and then took off again as it became clear that Trump was going to win. I think that Bitcoin just might be doing that, just kind of ready to kind of just go into a pit stop for a bit, trade between a range, but ultimately the growth trends in this space are massive.
I'm wondering about what you are observing in MicroStrategy, because that's a stock that's gotten a lot of love in the past as a proxy for Bitcoin. People liked that the company was adding so much Bitcoin to its balance sheet. And then late last year, the move just started to get so much bigger and people were getting a little cautious about MicroStrategy, it appeared. And, we're sort of reassessing some of the risks that were tied to its Bitcoin acquisition strategy. So what is your thinking behind that stock, if you can share that, and and on some of the concerns that are going around about MicroStrategy. Do you think those concerns are
Yeah.
warranted?
Yeah. So first, our Bitcoin Opportunity Fund owns MicroStrategy. It's one of our top positions on our public side. We have both a hedge fund and a venture fund, and on the hedge fund side, it's one of our largest positions. We really like that story a lot. In general, Michael Saylor and team have found the arbitrage of how to tap capital markets, whether it's convert debt, equity, and now even perpetual preferreds, which would be the form of dividend type structures that he'll use to sell capital markets products to then capture as much US dollars as he can get through those sales and invest that in the scarcest asset in the world, Bitcoin. So that arbitrage will continue. MicroStrategy, to answer your question on valuation, it's traded historically around a 2x book value, 2x its value of its Bitcoin on its balance sheet. Right now, it's around 2.2 times. So our view is like it's pretty cheap. I mean, it went up into the mid to high threes multiples to its underlying Bitcoin assets there at the peak a few months ago in November. I think that the way I look at it is it's a little like the regional banks that, you have JP Morgan trades at 2x book value, for instance, right? One of the leading banks ever. You'll have other banks up here in Boston where I live called like Brookline Bank trades at 0.8 times book value. But regional banks kind of trade at those discounts to the mothership. I think MicroStrategy has created a massive flywheel. It'll be possibly the leading Bitcoin financial type bank when the world's ready for that in a handful of years. And so I think it will always trade at some premium to book. I think the fact that it has access to the capital markets in so many fashions, from preferreds to converts to equity, allow it to trade at that premium. And the biggest risk you have on MicroStrategy is either you believe in Bitcoin is going higher or not. You worry perhaps about their leverage. To me, it's a modest amount of leverage. If you notice, they've only put unsecured debt, non-recourse on their balance sheet this time, whereas 3 years ago they had a $200 million secured loan from Silvergate Bank. That could have really hurt them badly in that downturn. They have none of that now. For instance, 2027 is their first maturity of $1 billion of converts. Real downturn if Bitcoin was at 30,000, they'd just have to sell kind of around 33,000 of Bitcoin, and they own like 460,000 Bitcoin, so less than 8% of their holdings they'd have to sell. They can manage through the balance sheet very well. I think they've been very prudent on how they're structuring it. So to land the plane on your question, like we really think it remains a great stock, a great flywheel. We're believers in Bitcoin prices going up a lot over time. We think demand will outstrip supply for Bitcoin as a store of value. So I think Michael and them have a flywheel, and at 2.2, we think it's good value right here.
I want to look back a little bit and talk about investing trends that you've noticed over the last couple of years. Obviously, a lot of investors coming back to Bitcoin to chase the recent rally. Have those investors returned or surpassed the levels from before the crash at the end of 2022 that we saw post FTX? Is there anything different about their strategy?
Yeah, I'd say that kind of some of the things I'm noticing are, whereas like 63% of all Bitcoin was hodled, as we call it, right? That has been held longer than 6 months. Last year, 63% of that type long-term hodlers weren't selling. It wasn't moving. People were holding. You are seeing in the last few weeks a little bit of an uptick, and the long-term holders are selling a bit, trimming. I don't know if it's a end-of-year tax thing or what, but you're seeing some sales. I think you're seeing kind of some of the futures markets have been very active. You're seeing probably 3x the futures volume, which speaks to leverage in the system. There's no doubt that the same stock market, general euphoria and leverage and risk on that you've witnessed has kind of those people come into to the Bitcoin space and lever up here and take risk. That creates some of the volatility. To me, that's just short-term noise. That's just volatility is actually options. It's opportunity rather, where we can take advantage of that. We're believers in the following, that Bitcoin's a $2 trillion asset in a world of 900 trillion in global financial assets. So it's less than 1% of global financial assets. When you woke up in 1980, as Paul Tudor Jones and Ray Dalio have pointed out, sound money assets like gold and silver were approximately 8 to 10% plus of global financial assets after that inflationary era of the 70s. In my opinion, whatever our next crisis will be, whenever that is, in the next handful of years, right? And in my opinion, we will have one because there's a levered problem in the world. When that happens and the money printers are flying, you will see sound money assets rally massively. They won't be 1% of global financial assets. And I think Bitcoin, has a chance to be, again, we can get into this kind of the whole convergence of AI and blockchain and this whole digital world as we move forward. How, in other words, Bitcoin will be the settlement layer for all things AI, and it'll be the internet version of money that can be trusted given its math protocol. When that happens, this asset class will just fly. I think we will end up well north of 10% of global financial assets. So, and there'll be inflation. So there'll be somewhere, $100 trillion probably of value for things like Bitcoin and gold to grab relative to just a 2 trillion market cap now. So we think that Bitcoin we are still early days. I think probably at 94,000, it doesn't feel like that to people, but it is. It's still so early. That's why, again, we've launched Fund 2 for our Bitcoin Opportunity Fund, and we think there's a huge opportunity here.
Okay, that's all for Crypto World this week. We'll be back again on Monday, and we'll see you then.